If rates rise because of Fed action and housing mortgage rates rise as well, what's that likely to do to the pace of sales, to the price of homes?
Well, it's just going to make it that much harder for that first-time home buyer to get into the market, and they're already having so much trouble. And the reason, actually, that we saw home prices rise so dramatically, so swiftly last year was because we saw more than a dozen record lows on the 30-year fixed. Now we're well above that, about 50 basis points higher than we were a year ago. That takes out of affordability and makes it harder for those buyers to get in. So we could see sales pull back a little bit. The question is, will we see prices pull back a little bit? And that's going to be about supply. And I don't see a lot of supply coming on.
Melissa?
Part of that, Diana, could also be the raw material costs, which we've seen gone up. So on the other hand, if Fed Powell is successful and a faster taper timeline, more rate hikes mean that inflation is actually nipped at the bud, then maybe buyers can see some relief on that front?
Well, I'm not sure, because actually some of these commodity prices that are going higher are not just about inflation. Like we saw lumber drop back to its normal level over the summer, only to spike back up over 100% last month because of Canadian lumber tariffs and because of bad weather in Canada and, of course, very warm temperatures here. So you see more builder demand. So I don't know that you're going to see material prices come down that much.
Back the last time inflation was high, in the late 70s, early 80s, I remember people saying that housing, real estate, was a good, not albeit an imperfect, hedge against inflation. Is it?
Well, so that's a weird, unique moment that we're in right now, because normally it would be a great hedge, but we're seeing home prices, home values so inflated right now, and so many investors in the market. The number of single-family investors, not just large institutions, but, hedge funds, smaller groups, pouring into this market and fueling all this demand for housing, which is pumping up the value of these homes. If these investors, which are no longer just the mom and pop investors that we saw in the past, if these investors say, okay, I'm seeing rising rates, I'm actually going to get a better yield somewhere else, and they start to perhaps sell off some of these homes, and I'm talking 15 million homes, rental homes in the single family sector, what does that do to the value? Is that a great hedge? Maybe not.
So if the investors pull out, that could pull out the rug from underneath house prices.
Now, I'm not saying that investors will. I'm not saying that, but they were hunting for yield, and that's why they went into real estate. If you see yields go higher, maybe they don't love real estate so much.
Diana, great to see you.
Thanks.